Welcome to our maiden VAT Masterclass. We begin shortly. Make yourself comfortable. VAT compliance is one of the most demanding parts of running an SME in Ghana. The rules have changed and the expectations are higher. The cost of getting it wrong keeps rising, and you are not alone in feeling the weight of it. The questions every SME owner is asking: do I still need to register under the new threshold? How do I migrate cleanly from the abolished flat rate scheme? How do I claim the input tax credits the new law now allows? Am I ready for electronic invoicing and real-time reporting? Today, we will work through each of them.
This VAT Masterclass is built for SMEs, not a lecture, not a theory class. It is a practical working session.
It is designed to help you understand the system clearly, plan effectively, and stay compliant without overpaying.
Good evening, everyone, and welcome to the Nexus VAT Masterclass. We are really glad to have you here. Can anyone confirm if you can hear me?
Yes,
we can hear you.
Great. So my name is Seram Ametafe. I am a business analyst at Nexus BI, and I'll be your moderator for today's session. Before we go into it, let me take a moment to tell you a little about who we are. So we are Nexus BI. We are a business solution management advisory and consulting firm dedicated to helping small and medium-sized enterprises, so SMEs. We help them operate with confidence, clarity. We give growing businesses financial clarity, compliance assurance, and operational support. Anything that they will need to scale their business, we offer that. We also deal with a wide variety of businesses, including retail and wholesale companies. We also deal with health and pharmaceuticals, restaurants, hospitality, agriculture, construction, and engineering. So if your business is in any of these industries, you are in the right place, and rest assured that what we will teach today will be able to help you. So what we do compliance, regulatory compliance, including VAT, PAYE, withholding, CIT, PIT, and directors' income filings. And we also do data analytics. We help business get their data into insightful reports. We also do financial statements, payroll management, business development, and human resource management. Without further ado, we are going to start today's session. Our facilitator for today is in the person of Bernard Donko. He's a chartered accountant, a chartered tax practitioner with hands-on experience helping businesses navigate the complexities of tax compliance. And Bernard is also the managing partner for Nexus BI. Tonight, he will be walking us through the VAT concepts that matter most to businesses in a way that is very clear, practical, and immediately applicable to all businesses. Bernard, you are welcome to this session. Please, you can take over. Thank you.
All right, thank you, Sarah. Thank you for that warm introduction. I hope the participants on the call can hear me. Okay. So welcome once again. My name is Benadonko, and I will be your facilitator for today's webinar discussion. There's a thumbnail for you to probably put a face to the name. I'm Benadonko, chartered accountant and certified chartered tax practitioner with the Chartered Institute of Taxation, Ghana. And I will be your host for today's webinar. But before we start, let's take this professional disclaimer. The intent and purpose of this webinar is for information and educational purposes only. The content presented, even though we've taken the necessary steps to give you accurate content, should not be relied upon as legal, tax, accounting, financial, or business advice. In case participants would want to reach out to us, they can reach out to us at partner@nexusbi.co or the number on the screen. Let's take a few outline of our webinar for today. We'll be looking at the components of the tax system. This serves as a foundational knowledge for us to actually appreciate the concept that we're going to discuss today. We'll take a brief overview of VAT, the legal framework, and understanding parties to a VAT sales transaction. Before we begin, I would want you to pay critical attention to this particular section of the masterclass. It is the foundational knowledge to understanding all tax laws that are enacted by the Parliament of Ghana. In every tax system, there are three components in the tax system. It starts with a tax base. The tax base is basically an economic activity, asset transaction, for which government can derive tax revenue from. And once tax bases are identified, what the government does next is to enact a tax law to collect the applicable tax on the identified tax base. So when the government saw that there was a lot of electronic transactions, they brought the VAT, they brought the e-levy to collect taxes on electronic communication. Once tax laws are enacted, there is a principal competent authority that administers the tax law. In Ghana, our competent tax authority is the Ghana Revenue Authority. So tax bases, as I said earlier, are economic activities, transaction, assets. From these activities, the government can derive tax revenue. And in principle, there are three tax bases. We have the income tax base. That's usually the broader tax base. And we have expenditure tax base. So when individuals in an economy or in a country spend, there is an avenue for the government to tax. The last one is wealth tax base. So this is imposed when residents are making or accumulating wealth. Example in Ghana is property rate. The income tax base, as I said earlier, is the largest tax base that we have in Ghana. It comes as a result of people making income or generating income, whether the income is derived, brought into Ghana, or received in Ghana. It serves as a basis for the government to tax those income tax bases. In principle, there are three income tax bases. We have the employment income tax base. We have the business income tax base, and we have the investment income tax base. So this happens to be the first part of the tax system, that's tax basis, and we narrowed it down to the income tax base. There's always a link between tax basis and tax laws, as I said earlier. Once the government identifies a tax base, a tax law is enacted. Example, when the government identified various sources of income tax bases, the Income Tax Act 2015-896 was enacted. So almost all income taxes are taxed using Act 896. Similarly, consumption expenditure, the government enacted the Income Value Added Tax 2025 Act 115. People importing and exporting, once there's a lot of importation, is a source of consumption. The Customs Act was enacted. A lot of communication activities in 2008. The then government enacted communication service tax. It identified the tax base, and once tax bases are identified, tax laws are enacted to derive or extract those revenue for the state. So with this webinar discussion, our focus is on consumption. So we'll be looking at the tax laws that relates to consumption tax base. The last component of the tax system that we have here in Ghana is the competent authority. The competent authority is responsible for tax administration, and in Ghana, it is the Ghana Revenue Authority. There are two principal laws for tax administrations in Ghana. The first law is the law that establishes the Ghana Revenue Authority. And the next law is the law that gives the Ghana Revenue Authority the powers to administer tax laws in Ghana. And that is the Revenue Administrative Act 2016, Act 915. I'm just trying as much as possible to reduce the legal jargons, but if you follow the discussions up to this point, you've realized that when we are talking about taxation, law is a crucial part or a foundational part of tax administration in Ghana. So a key point, while various tax laws imposes taxes on different tax bases, the Revenue Administrative Act is the foundational or the procedural law for administering taxes here in Ghana. So that was just an overview of the tax system that we have here in Ghana. So as a way of a quick revision, the tax system is made up of one, tax basis. From tax basis, tax laws are enacted. Once tax laws are enacted, it's important to have a police or an authority administering these tax laws. And in Ghana, we have the GRA doing that for us with a lot of competent team discharging their legal obligation. Let's take an overview of VAT for the ordinary person. Just reduce the legal jargons. Just a quick reminder of our price theory. I hope you all remember the basic theory of demand and supply. We're going to focus a bit on the supply side. So supply simply refers to provision of good or service by a supplier, manufacturer, or producer, right? And I'm being careful with this definition. I've tried as much as possible to use provision rather than using the word sale. From this definition, we can establish that supply can be either a supply of a good or a supply of service. But all throughout this masterclass, anytime I use the word supplies, I'm making reference to either the supply of a good or a supply of a service. So please, let's have this foundational knowledge. When we say supply, it only means that a manufacturer, a producer, or a supplier is providing good or a service to a customer. Okay. Next, if a manufacturer or producer is making out supplies, it obviously means that there is someone demanding it or a customer demanding it at the other side. So we should also be careful to note that once someone is making out supplies, there is another counterparty demanding those supplies. But when it comes to VAT and supplies, the law is placing the supplier in a fiduciary position that Whilst they are making their supplies, they are required to also charge a tax on the suppliers and remit that tax to the state. So the tax law, right, is putting a legal obligation on suppliers who are making their normal supplies, it can be supply of a good or supply of a service, to charge VAT when they are making their supplies to their customers. It makes suppliers act as agents of government to collect those VAT on behalf of the state. So this slide tries to establish that in a VAT transaction, customers are liable for the VAT, but suppliers are liable for charging the VAT and remitting it to the state through the Ghana Revenue Authority. So VAT is simply a tax levied on supply of goods or services. We are trying to make the definitions a bit simple. We are not actually looking at the legal definitions too much. This series 1 of the masterclass webinar is supposed to establish foundational knowledge. And once we become comfortable, we can build on it to look at more in-depth and provisions. So who makes the supply? Obviously, it is the supplier, producer, manufacturer, or the business who owns the good or service, right? Said earlier, this creates a fiduciary relationship between the Ghana Revenue Authority and the supplier making those supplies. Anytime two parties are in a fiduciary relationship, an agent and a principal, there is this agency risk. Student of audit and assurance or control or strategic management are aware of this agency risk. When someone is acting on behalf of another person, it's possible both parties might not have the interest of each other when they are transacting. So there's a need for, it creates a risk, and obviously once the risks are created, there's a need for the parties to put the necessary controls to mitigate against those risks. So parties to a sales transaction will have the supplier who will be responsible for 1, charging, 2, collecting, and the last one, remitting the VAT on behalf of the state. Then we'll have the customers who will be liable, right, for the VAT as part of the gross value of the good or the service that they are purchasing. The Ghana Revenue Authority will act on behalf of the state to ensure that the VAT system is administered in full compliance of the VAT law, right? So these three parties in a VAT transaction obviously will face varying degrees of risk, right? So we're going to look at some of the varying degrees of risk that these parties face. At one point in time, you can be any, you can fall under any of this category. So we might have GRA officials on this call, right? Probably monitoring to see whether we are not giving advice on how to evade tax, for which you don't do here. You can also be a customer of a good or a service for which you would want to know your risk in that VAT transaction. But as well be an owner of an SME and want to know whether or not you are charging the right VAT, or are you even supposed to charge VAT on the good or on the supplies that you are making. We will start obviously with the risk that is faced by the GRE as a principal in a VAT transaction. So GRE faces some of these risks. Are businesses charging the correct amount of VAT? They would want to know. Are businesses that are required to charge VAT actually doing so? They want to know whether the taxes that have been collected by the agents, that's businesses, right? Have they been remitted to the GRA? And have the full amount been remitted? Remitting it comes with a timeline or time horizon. Has it been done with the applicable time based on the law? and have all businesses that are required to register for VAT done so, and have been commenced the charging of VAT. So these are some of the risks that GRA obviously will face. And once GRA faces this risk, there's obviously going to be some steps that the authority will put in place to help mitigate against those risks. One will be mandatory VAT registration. So when we go through the VAT Act, you definitely see mandatory VAT registration by eligible businesses. There's always a tax education and awareness program for which Nexus is supporting the course by educating businesses on VAT and other tax laws. Periodic tax audit and investigation. It can either be a desk review or a full field audit conducted by the Ghana Revenue Authority. Businesses, SMEs, one way or the other might have faced one form of tax audits by the Ghana Revenue Authority. There can be monitoring of VAT returns, reconciliation of tax declaration by third party information, imposition of penalties. These are all various steps that the Ghana Revenue Authority can put in place or are in place to ensure that the risk that GRA face as principal to a VAT transaction are reduced to the barest minimum. We want to look at how businesses are supposed to manage their risk in the VAT transaction. Are businesses charging the correct amount of VAT? There are a lot of instances where we, for clients, we realize that the correct amount of VAT are not charged. Are those who are required by law registered? Have they issued valid VAT invoices? The VAT law requires that businesses who are registered to charge VAT issue valid VAT invoices, either the hard copy VAT invoice or through the e-VAT system, or a dispensation to issue their own computer-generated invoices. Are they late payment or non-remittance of VAT collected? These are various risks that businesses face. It goes a long way to include reputational and operational risk, right, through dispute with the Ghana Revenue Authority. A lot of instances where you hear that the authority has closed down shops and other business premises of taxpayers who have defaulted. These are last resort measures that the GRA resorts to. So for it to get to that point means that there have been a lot of non-compliance by business owners, for which we have some of these training to empower SMEs and businesses and customers to know their rights and obligation under the VAT law. As customers, we also face some risk being charged VAT incorrectly by suppliers. You go to Melcom, you buy fresh fruits. Those fresh fruits are exempt products or exempt supplies, but you happen to pay VAT on them at the counter. You might go to any other shopping mall. Exempt products are sold as part of taxable products and they are paying taxes for which you are not supposed to. Act 115, the new VAT Act, the effective VAT rate is 20%. But the old Act, the effective VAT rate was 21.9%. Question is, are you still paying 21.9% or you are paying the 20%? Where probably your suppliers are wrongly charging you or invoicing you. So this webinar seeks to empower you to know the risk that you face and how you can overcome those risks. Are you paying VAT to suppliers who have not registered for VAT? Yes, there are a lot of suppliers who would charge you VAT, but they are not legally registered to even charge VAT. Are you paying more than what is legally required? If you don't receive a valid invoice for a taxable supply, there are a lot of risks that you face. The Commissioner General can deny you tax deductibility of those expenses. Tax deductibility is is gotten or derived from Section 9 of the Income Tax Act 896, where when the expenses are wholly, exclusively, and necessarily incurred in business expenditure, you are required to get a deduction. But if that expenditure is a taxable supply, the authority might want you to support it with a VAT invoice. So not getting a valid VAT invoice for taxable supply can lead to you not getting a tax credit for those expenses. So as customers, we can be guided. Yeah, bearing the VAT of supplies that are exempt, as I said earlier. You go to the market, you buy fresh meat. Fresh meats are exempt. But through this webinar, you will get to understand the whole set of exempt supplies so that you are guided. In case you are entering into a contract for an exempt supply, you will be sure not to pay or challenge any VAT on those exempt supplies. Now look at strategies for business to reduce those VAT risk. Just a quick check whether the participants can clearly hear me. A few emojis and thumbs up will do. Okay, thank you. Another disclaimer. So the strategy I'm going to discuss here is for you to ease the pressure of compliance on you, but not necessarily a tax evasion scheme that we are planning. So for evasion, there, not on this slide and not in this masterclass, right? So our focus is on compliance, risk management, and the proper administration of VAT in accordance with what the law, right? Don't see us backstage for tax evasion. No, we don't do that. We are Christians. We can do proper tax planning exposure, but all right. So they're looking at general strategies, right? A lot of them. Let's start with registering for VAT promptly when required by law. So if you are supposed to register with VAT, let's register it promptly when required by law. Understanding and complying with VAT legislation and regulations. Correctly classifying supplies as taxable, exempt, zero rated, relief supplies. So correct classification is also very important, right? Charging and accounting for VAT accurately on all taxable supplies. So it's a strategy that you can adopt. Issuing valid VAT invoices. Filing returns accurately and on time. It's very important. So there are two obligations here: the filing the return and doing it on time. You're remitting what you've collected on behalf of the state. The tax is not our money; it's money for GRA. Even though it has economic impact on our businesses, right? Because taxes affect prices, and price, depending on the price elasticity of demand, can affect the amount that we can sell. And once sales output is affected, it means profitability is also what's going to be affected. So yes, it has impact on businesses, though. Maintaining complete and accurate accounting records, conducting periodic VAT reviews and reconciliation. Some mid-tier SMEs would want some level of tax health check. Tax health check is a pre-audit that we do to ensure that your business is in full compliance with the various tax types that the business has registered for, even before an audit by the GRA. Training of your staff on VAT compliance, for which we are doing, and seeking professional advice when dealing with complex transactions, right? So those strategies that we discussed on the previous slides, times can be daunting, but at Nexus, you have the expertise to manage those exposures for you. You can always reach out to us for us to have a conversation on that. Moving on, we are going to discuss specific strategies. We will discuss 3 specific strategies to mitigate against some risk that businesses face due to VAT, right? They are legal risk, they are legal strategies, I mean. We know that VAT charged in a particular month is due at the end of the following month. So when you take an example, if a VAT is charged on taxable supply made in the month of March 2026, it means that the VAT return must be filed and the VAT paid to the GRA on or before 30th April 2026. But in general, we assume that this gives businesses a 30 days credit period. No, that is not the case. Let's take our time to dissect it and bring out the tax planning strategy here. So regardless of the date in March on which we will make the sales, right? All sales in the month of March are due on 30th April. This presents 2 unique benefits or issues. So it means that if we issue or we charge VAT on 1st March, we would have the whole of March and we have the whole of April to file those taxes that we collected in the month of March. It gives the business close to what 60 days period to get cash flow and pay the applicable taxes. But if we should charge the VAT on 31st March, then the business will only have from the ending of March to ending of April to file and pay any VAT on those invoices, right? So you realize that. So I believe you are seeing the tax planning advantage here. So invoices that are issued at the first half or earlier part of the month have a longer credit period or longer time before the next VAT cycle. So it gives businesses, if you're SME here, it will give you the opportunity to give longer credit terms to your customers, right? But invoices that are issued at the latter part of the month comes with a shorter period to file your VAT. So where it's commercially feasible to defer transaction at the end of the month to the beginning of the month, it opens up new customers, because there are some customers who would want a longer credit period. So if credit period is the only strategy that you have to increase your sales, shifting transaction to the beginning of the month, those that are close to the month to the beginning of the month, if you can, will reduce the pressure on VAT cash outflow. We will take a practical illustration, but before that, I just want us to quickly get an understanding on when are you required, right, to actually charge VAT. Section 39, subsection 1, paragraph C of Act 1151 presents us with that definition. So let's try and go through it. Then we'll get to know at what point are we obligated to charge VAT. So on the earliest of the date on which the goods are removed from the premises of the taxable person or from any other premises where the goods are under the control of the taxable person, the goods are made available to the person to whom the goods are supplied. So the goods are removed, are made available. I made available means that it has not been moved, right? But in my warehouse, I've told you that, oh, Nexus, there's this good in my warehouse. You, in this agreement, you can come for it. They are available. When you go, you can see the security man and have access to it. So they are available for you to what? Access. The III is performance of the service is completed. So this one is supply of service. IV, receipt of payment occurs, or V, a tax invoice or sales receipt is issued. So the earliest of these dates is when you're supposed to what? Charge VAT. And for these 5 events, within the control of, if it's within the control of the business and the customer, and it's close to the end of the period, and it can move to the beginning of the period, it will make a lot of business sense in terms of tax planning purposes, right? But for other reasons, accounting reasons, probably, I don't know, but for tax planning purposes, make a lot of sense. If you should move a transaction from the end of the month to the beginning of the month, you would open yourself up to a 60 days credit period. Okay, so let's take this illustrative example with figures, and we can actually assess the impact of this decision. So Blue Sky Company Limited sold goods worth 800,000 to a customer on 28th February 2026 on credit. So the dates are very crucial. Delivery of goods was done on 28th February, right? That delivery was done on 28th February, and there was no advance payment, right? And the VAT invoice was also issued on 28th February. So it means that the time of VAT is on the 28th of February. Okay. Then the taxable supply, the gross value is 800,000. We are considering the new VAT Act 1151. It came to repeal 870. We'll go to those ones. We don't want to bore you with a lot of legal jargons and whatnot. So when you charge 20% VAT plus levies on 800,000, we have 160,000. It has a lot of what cash flow, right? So because the transaction happened on 28th February, in the month of February, the VAT are required to be filed on or before 31st March 2026. That's approximately 30 days, right? 30 days. The maximum trade credit that Blue Sky can allow is 30 days, because if you allow more than 30 days, it means that you would have to look for barest minimum 160,000 Ghana cedis cash as VAT and levies to be filed on or before 31st March 2026 for the sales transaction that happened on 28th February, assuming that was the only sales transaction that happened on 28th February 2026. But everything can change if okay, let's still look at the cash flow exposure. So analysis are okay. So 28th February, 800,000, VAT is 20%, filing of returns and payment is due 31st March. Available VAT credit period is approximately 30 days, which we've already done the analysis. Okay. What will happen if the transaction had occurred on 1st March instead of 28th February? Okay, so let's go to that. Let's go to that. Okay. What will happen if the transaction had occurred on 1st March instead of 28th February? So here there's an important phrase here. However, due to the same preamble, but there's this act of God. See, I can't tell you that there should be flood, but it's by an act of God where there's flooding in Accra, so the delivery could not take place until 1st March 2026. No advance payment was received. There's no invoice, there's no receipt, there's nothing. The transaction actually happened on what? 1st March. They agreed in principle. Nothing happened on 28th February, but now on 1st March, Blue Sky does the delivery to its customers. So the time of supply is now 1st March instead of 28th February. The VAT filing and payment will be due on 30th April 2026. What happens? The company in question, Blue Skies, will have from the 1st of March to the 30th of April to file and make the payment for the VAT. So that's 60 days, right? If a business has the opportunity to increase credit term for its customers, there are potential benefits that the business can draw, right? The potential benefits can come from increased profitability through increased sales, right? Another benefit will be, even if the customers had paid Blue Skies the whole amount, the 800,000 on 1st March, Blue Skies will still have this 160,000 VAT levies, and they could have operated and they could have operated with it for the period of 60 days before remittance came to the state. So the strategy is not intended to deprive the GRA of tax revenue. No. Rather, they are intended to help you, a business owner, to manage VAT-related cash flow pressures within the framework of the law. So you are required to file by the end of the following month in which you made the sales. You are doing it at the end of the month. It makes a lot of business sense if it can happen at the beginning of the month. If it can happen legally, you get a breathing space for 60 days to manage your exposure. And once that is done, the full amount of VAT levies are filed and remitted to GRA when the time is due. And of course, speaking to the Commissioner General, we are not here to let you pay VAT tax. We are just teaching you ways and of managing your tax exposures legally. Right, look at the third strategy. This is about registration and deregistration, and we are looking at some inconsistency between registration requirement for people who are required to who are supplying taxable goods, right? Before Act 1151, 870 placed a threshold for the registration of VAT for businesses that deal in taxable services, right? But the new act that started this year has cancelled that threshold for businesses that deal in taxable services. So all businesses that deal in taxable services are required to register for VAT. There's no minimum registration threshold. But for businesses that deal in taxable goods, the initial benchmark for registering was 500,000 in Act 870. By in Act 1151, it has been increased to 750. This brings a benefit to businesses that have a revenue of between 500,000 to 750, less than 750, and they deal in taxable goods. So under the old act, businesses that were making a revenue of 500,000 in taxable goods were required to register for VAT. Under 1151, they are not required. So what you can do is, if you're a business and you deal in taxable goods, your turnover is not more than 750,000, but was more than 500,000. So you are forced to register, or not forced, you are required by law to register under 870. But now your revenue is still less than 750. You can always apply to deregister. You can always apply to deregister as a VAT registered business, and it has a lot of benefit for you, right? It has a lot of benefit for you. The legal basis that we are drawing this is from when we look at section 73, subsection 2. That is the repeal and savings in Act 1151. It says that despite the repeal of the enactment specified under subsection 1, the regulation, the bylaws, notices, orders, direction, appointment, or any other act lawfully made or done under the repealed enactment which is not inconsistent with this act, are enforced immediately before the commencement of this act and shall be considered to have been made or done in this act and shall continue to have effect until reviewed or cancelled. So it means that Act 870 is inconsistent with Act 1151 on the basis of the threshold for requiring businesses that deal in taxable goods to register for VAT. And once the inconsistency is established, it is 1151 that will hold. So businesses have the legal basis to apply for the deregistration because it increases your this business are SMEs, the compliance cost of VAT might be die on these businesses, right? So you can always reach out to Nexus for us to assist you. Probably some of the benefits that you can enjoy. Your customers will no longer have to bear additional cost of VAT and levies of 20%. So your prices will automatically reduce by 20%. It gives you some level of competitive advantage, right? And once prices are reduced, right, normal economic theory or concept, you're able to there's increase in demand, so you can sell more. It will eliminate those obligations on VAT, removes administrative burden for SMEs who don't really have the structures to collect and administer VAT appropriately. Right, so you can always feel free to talk. So when you've done the assessment and you feel that you are not pushing anyone to do the deregistration, you are just presenting the benefit of SMEs who are dealing in taxable goods. There's a reason why the framers of the law, right, place that 750,000 restriction there to allow small businesses the room, right, of operating without any complex legal obligation or burden on them. Okay. We are wrapping up, but we'll take an overview of the new VAT Act. So it has 75 sections divided in 14 parts. It has 5 schedules. And it has repealed the previous VAT Act and has become the principal VAT Act governing all VAT transactions in Ghana. With the enactment of Act 1151, Act 870, that was the principal VAT Act, was repealed. And in most cases, this is consistent in the tax administration, they call it system, where you have principal enactment and there'll be a lot of subsequent amendment. So these were the various amendments on the principal Act 870. Some of these enactments include withholding on VAT and the rest. All these acts have been repealed. But there's an important notice for you on the repealed act. They've been repealed, right? But you should know that the repealed law continues to have effect in relation to periods during which they were enforced. So if the authority is auditing you for periods where these laws were active, the audit will be based on those laws and not the new act. So the repealed act, we say they are effective still retrospectively, right? So in the past or historical, they have legal effects. That's why businesses are supposed to maintain continuous professional knowledge on tax laws, both current and repealed legislation, because you might have a client that is undergoing a GRA audit from 2023. 2023, there's no 1151, so you would have to know 870 and advise the client accordingly. And always, Nexus BIC here, we maintain a high level of technical and operational expertise, both in current and new laws. And so that's, so when we go back. Okay. We would take the first section of Act 115, then we'll move to types of supplies, then we will end on exempt supply. Anyone who wants to master VAT will have to master exempt supply. What exempt supply is the power that you get to know all taxable supplies the law is that the law defines or provides the set for exempt supply. And it says that if it's not exempt, then it's what? Taxable. So for you to know and understand taxable supply, the only way you can do that is to master what? Exempt supply. So we'll quickly do that. But first, we are looking at how the law defines VAT. So it's a tax imposed that is imposed on supply of goods or services made in the country other than exempt goods or services, and import of goods or services other than exempt import, unless otherwise provided in this act. The tax shall be charged on the supply of goods or services where the supply is A, taxable supply, B, made by a taxable person in the course of a taxable activity of that person. A lot of important concepts here, which has been developed by the Act 115. I'm just bringing them here for your knowledge. In subsequent masterclass, we will take our time to look at it and its importance and how you can position yourself to reduce your tax exposure. We can't hear now. Can anyone hear me aside Sunny Isa? Okay, Felix can hear Gerard. Okay, right. Thank you. So, Sunny, let me finish. If you have any questions, so please hold on with your questions. If you have any questions. Okay. So this point, I'm bringing them to your attention. In subsequent masterclass, we'll do justice to them. So these are all points that we are able to we derive from Section 1 of the Income Tax Act. Okay. The category of supply is very important. We have exempt supplies. Those supplies are outside the scope of VAT. They are not supposed. They are not VATable. They don't come anywhere in the VAT law. Then we have those that are in the VAT law. So once you know exempt supply, when you take exempt supply out, the remaining supply, either supply of good or of service, becomes what taxable supply. When a business is making both supply at the same time, we call that one mixed supply. When you go to some of our shopping malls, they sell both provisions items, and they also sell, let's say, vegetables. Vegetables are an exempt supply, provisions are taxable supply. Both of them being sold by one taxable person becomes what? A mixed supply. But taxable supply can be broken down into three main parts. We have zero rated supply. Zero rated supply are supplies that are taxable, but the rate is zero because of the destination where we are making the supply to. So if you are selling outside Ghana, even though the supply will be taxable, the rate on it becomes what? Zero. If you are selling to the free zones, which is the same thing, they are zero rated. So zero rated is when you are selling outside of Ghana. Then we have relief supply. Relief supply are taxable supply, but because of the status of the individual, they are relieved from paying the VAT. So they issue a VAT relief purchase order in replace of the amount of VAT that they are supposed to pay. Then the last one is normal taxable supply. So for you to understand and master VAT, you need to master exempt supply. That all the definitions I've already explained. Right. So understanding of any mastering any VAT concept will start from exempt supply. Section 35 defines exempt supply. It's defined exempt supplies as the goods or services specified in the first schedule of the income tax of the VAT Act. Sorry. Then it also defines exempt import as import of goods in the first schedule of the VAT Act 1151. The harmonized code, we'll hold on to the harmonized code because we will only focus our attention on the first schedule. The first schedule is the schedule of all exempt supplies in Ghana. We will take a quick view of the 23 exempt supply categories that we have in Ghana. Please bear with me. It's very important. Most of the time, if you leave it to participants to take time to read, they don't. So let me just take a quick. Let me just skim through. So exempt supply, we have agricultural and aquatic product or output. So this is an output in a raw state. So maize, sorghum, millet, tubers, guinea corn, any agricultural output in their raw state that we produce in Ghana are all exempt. Then this is a continuation of agricultural outputs that are exempt. That under exempt of agricultural outputs can mean edible meat or offal of cattle, sheep, goats, swine, poultry, or any livestock bred in Ghana. Then for the purpose of this paragraph, in their raw form might mean freezing, chilling, drying, salting, smoking, stripping, polishing. They are still in their raw form. So if you go to Melcom and we have, let's say, seeds that were produced in Ghana, but they are in a nice package, it's still in their raw form. They have not undergone any processing. Goat, cattle, sheep, goat, swine, poultry, or their raw meat are all exempt, right? So let's note this. Okay, already done this. Then after agricultural output, we go to agricultural input. What went into the input of agriculture? You can have seeds, fertilizers, or other chemicals, right? They are all exempt. You can have fishing gears are all exempt. That's paragraph 5. Supply of water is exempt, but those water that are in bottle, either plastic or glass, are taxable. But supply of ordinary water are exempt, including sachet water. They are exempt. Supply of electricity to dwelling is exempt, but supply of electricity to plant or a manufacturing site are taxable. Textbooks under Ministry of Education are exempt. Supply of educational services are exempt. That's why when you have a ward that is going to SHS or GHS, you don't pay for VAT. When they're invoicing you, it is a supply of service, but that supply of service is exempt because they are not taxable. Okay. Laboratory services, medical services, domestic transportation by road, rail, water are exempt. So if you pick your boat, you're not supposed to pay VAT, even though it's a supply of service. It is an exempt supply. Right? Machinery for agriculture, mining, veterinary practice, fishery, aquaculture, horticulture, manufacturing, railroad, tramway, upstream petroleum operation, not downstream, upstream petroleum operation. These are all exempt. Then when you buy your fuel, your diesel and your LPG, they are exempt. We don't pay taxes, VAT on them. You can pay other form of taxes, but for VAT, they are exempt from VAT, but you can pay other taxes. But for VAT purposes, they are exempt. Then accommodation in a dwelling. If you happen to book an accommodation in a hotel, you don't pay VAT for the accommodation. Other services that they provide, you might pay VAT on them, but for the accommodation, you don't pay VAT. So if you buy food, you might pay VAT on the food, but for the accommodation, they're exempt. Please, can you hear me? I'm wrapping up. Supply of goods for disability, exempt. Salt for human consumption, exempt. Mosquito net, exempt. Paper for the production of exercise books and textbooks are exempt. But if you have papers for the production of, let's say, scientific output, like litmus papers, those one will be taxable because there's a specific criteria for exercise books and textbooks. Import of mild carbon steel for machetes are exempt. If you import an electronic vehicle for public transportation, exempt. So, is this a summary of all the exempt? The importance of knowing exempt supply. So next time you are in a shopping mall, you get to know the supplies that you're supposed to pay taxes on and those that you are not obligated to pay taxes on. And even the one making exempt supply cannot go and register and charge you VAT. They cannot. Right? It cannot happen. So they cannot be registered and say that I was dealing an exempt, I mistakenly registered for VAT, so I'm charging you. You cannot even register and charge at the first place. So you get to know. So it also guide businesses. If I'm a young entrepreneur and I want to enter into a business, but I want a business that has low compliance risk, right? I might venture into the supply of exempt supply. It also help you to plan your taxes accordingly, because if I deal in both taxable supply and exempt supply, which is possible, the input deductibility is only for the taxable supply and not the exempt supply. So if I don't correctly account for my exempt supply, my taxable supply, the probability that I will lose chunk of my input tax credit will be high. So these are all reasons or benefits of knowing the global list of exempt supply. It helps in what accurate tax plan. As I said earlier, you might want to go into the supply of exempt supply because of the low VAT compliance requirement. Understanding it will make your business audit ready for any future GRA audit. And if you want to master VAT, it begins with what? Mastering exempt supply. We've established the foundational concept for VAT in Ghana with this first version of our VAT Masterclass. We'll pause and take questions from our participants. When we are done, we'll call it a day. Then based on your feedback, we will set up the next section of our webinar masterclass on VAT. Thank you. But before the questions, I would wish your questions are limited to what has been discussed, because there's a lot on VAT. If you open up, if you bring questions from the regulation, questions from the administrative guidelines for issuing VAT invoices, VAT tax credit, VAT withholding, we will not close, because these are not subject of the presentation, right? So if you also want areas, if you want to suggest areas that we should focus on in our next webinar, please, you can do so. So please, the floor is open.
Hello, Emmanuel. You can go ahead and ask your question.
Oh, okay. Good evening. Can you hear me loud and clearly?
Yes, we can.
Okay. So I want to ask a question which relates to exempt supply. Assuming that I start a small fish business and then a hotel reaches out to me. I was about to supply the fish and they requested from me a VAT invoice. But from the discussion we just had over here, it was concluded that fish in their raw state is categorized as an exempt supply. So in that situation, how do I go about it? Do I go there and tell the management that, oh, the fish falls under exempt supply, so I'm not supposed to supply them with a VAT invoice? I just give them my normal invoice. How do I handle such a situation?
Thank you, Emmanuel. And these are practical questions that I'm so happy to respond to them. Just last 3 days, I applied for a VAT certificate for a company that is dealing in an exempt supply. The reason was they have supplied to a government institution and the procurement office wanted a VAT certificate. The finance department of the government institution has written to the procurement office telling them that the supply is an exempt supply, so the business is not required to bring a VAT certificate. Procurement was undermined, forcing the business owner to register for VAT. So with this one, the certificate is just for enhancing or pushing your business, right? But you don't get to pay or charge VAT. So as part of your supply of the fish to the hotel, you cannot charge VAT, right? You cannot charge VAT. Sometimes they would want the VAT certificate as part of their initial pre-qualification processes. But the main issue is that the lack of understanding of the tax law. So they are being overly conservative. I mean, the business, your prospective customers. Mm-hmm. There was this administrative guidelines or practice note on businesses requiring VAT certificates before expenses can be deducted or can be allowed as deduction. But in that same practice note, the Commissioner General did well to state that if the supply is an exempt supply, then the expense can be allowed as a deductible expense if it meets the condition of Section 9 of 896 at 896. meaning they don't require any VAT certificate for those exempt supply. But businesses didn't probably even read that practice note by Amin Shaddai, or Reverend Amin Shaddai, the former Commissioner General. They took it as a blanket knowledge that for every purchase they make, they want a VAT invoice in order to protect themselves. You see, they put SMEs in an uncomfortable position where they have to go and register with the authority for VAT, for which they are not supposed to, right? So one practical example, if you speak to your prospective customers and they get to understand that your business is exempt, you can even probably quote some few section of the law. Nexus can do it for you for free. We can write a letter on your behalf, telling the business owners that there's an exempt, how do you call it, supply.
Business.
So you're not supposed to. And if they are still undermanned and we still want the business, it doesn't cost us to register for VAT and getting a certificate and filing nail, because you are supposed to file nail. And no one, it doesn't raise any eyebrow, it doesn't create any other risk exposure for filing nail. Once they see you filing nail, why are you filing nail on your portal? Oh, I did an exempt, but my customers required me to file. I filed for the certificate, but I cannot charge. It's as simple as that.
Okay. There, I really appreciate the clarification and everything. Thank you so much.
You're welcome, Emmanuel. Thank you.
Hello, Benjamin. Your hand is raised.
Yes. Good evening once again. Please, I want clarification on the pharmaceutical exempt, the exempt supply of pharmaceuticals. My only challenge is that within the same exempt, the little I know is that medications, drugs, there is exempt on drugs, but there are components on the pharmaceuticals that also attract VAT. So I want just a few clarification. If the facilitator doesn't mind, I can cite an example.
Please go ahead.
Yes, please, with all due respect. For instance, I'm citing an example: syringes, bandages, and all those things are components. They are part of the pharmaceutical chain, but when you purchase them, they require that you request for a VAT invoice. However, when you request for it, the suppliers will tell you point blank that they are not entitled to paying any VAT because those are exempt. However, when you write to the procurement agency requiring that they assist you to draw clarity on all those things, sometimes they also say, oh, they will keep on saying go and come a whole lot. So it always confuses me. I don't know if someone has also encountered this same challenge.
So
Please, my network is a bit bad. So, yeah, hello. Hello, please, my network is a bit bad. So I don't know if you can hear me.
yeah, Benjamin, I can hear you.
Yes. So please, I want clarity on the pharmaceuticals exempt, especially the non-drug component, not the drugs.
Okay. Any other question similar to what Benjamin has asked? Okay. If there's no other question, let me just answer that of Benjamin's question. So, Benjamin, pharmaceutical products are exempt, right? But cosmetic products are not exempt. So, pharmaceutical products are exempt from VAT. Medical services and medical supplies, the strangers are also all exempt from VAT. I think I was explaining this with that of Emmanuel. There are certain businesses, right? They require VAT for everything. They require VAT once you supply business with, once you make a supply to them, they want VAT to pay. And I think I've established in my last submission that they are being overly conservative, one, and two, is coming from a place of being too much conservative. The law is clear that they are exempt supply. Some of them don't even know that they're exempt supply. That's why I said for you to actually master VAT, let's start from mastering exempt supply. If some of these businesses had people that actually mastered exempt supply, they will know on top of their head that this is clearly an exempt supply. But because of the directive or the practice note that was issued on requesting for VAT certificate, if you don't mind, let me try and see whether I can show you a section of that regulation. No, that practice note. In that practice note, it recognizes that there are some businesses that will deal in an exempt supply. So for them, they will not produce a VAT invoice as part of the supply that they made, and it is legal. But because sometimes the customers who don't know this law are the ones more or less like driving the wholesale transaction. If you don't bring it, we'll not buy it from you. You are registered for VAT as being an exempt business. The unfortunate thing is that sometimes the government authority are supposed to step in with probably a note that this business with this SIN number are VAT exempt business, so they are not supposed to register for VAT. In that case, all supplies that they make that are exempt are tax deductible. If they can give those notes to businesses, it makes their life easier. They don't have to register for VAT for an exempt business. So I'm just trying to tell you that last week, this last week, yeah, I think Wednesday or Thursday, I registered a client for VAT, a client that deals in exempt supply for VAT, because a government institution was withholding was holding on to their payment because they've not produced a VAT invoice. And it is interesting to know that the finance department of this government institution have written to the procurement department telling them that for this business it is wholly exempt and that they don't need a VAT certificate in order to pre-qualify them. But still, the procurement department was undermined. And if you hold on to an SME's cash, they will have no cash flow to operate. So they were forced to register for VAT, add a VAT certificate to the document, and the client has been paid. Meanwhile, they are not supposed to. So probably after registering and get the certificate and get your payment, you can probably write again to them that you want to cancel your registration and that you are dealing in only exempt out, and it's fine. We have not breached any law and we are not evading any tax. So Benjamin, that's the practical problem that we face now, where people that are supposed to award contracts are not aware. So they are requesting VAT invoice on all blanket supplies. They are unable to distinguish between an exempt supply and a taxable supply, and when to require a VAT certificate or VAT invoice for an exempt supply or taxable supply. So that's the practical challenge we are facing. Sometimes you even question whether the supply that you think it's exempt is actually exempt. Any question?
Perpetual, please, your hand is up.
Good evening, and thanks for the education. May I know if which religious items or whether religious, kind of, we call them sacramentals, religious books, rosaries, and whatever, whether they are included or exempted from the tax? Can we put the thing on?
So in the list of exempt supply in the first schedule of 1151, religious books and religious sacramentals are not exempt supply.
So
But
why
you
are
see,
they?
no, you see,
Okay, they are not. Okay.
yes, so they are not. But
Mhm.
let me take you to. Let me take you, please. My audience, please permit me. It's important I show this. Coming. I'm 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 coming. Okay. Rebecca, this is the definition. So the imposition of VAT.
Okay.
Let's look at subsection 2 of section 1. It says, unless otherwise provided in this act, the tax shall be charged on the supply of goods or services, right? Where the supply is a taxable supply and made by a taxable person in the course of a taxable activity of that person. So if it's a religious body giving it to, let's say, bless their members, it is not a taxable activity.
Okay.
So even though the item by its nature might be taxable, might be a taxable supply, because it is not by a taxable person for a taxable activity, you are not supposed to charge VAT on it.
That, sorry. But they are charging 20% flat.
No, so who is making this supply?
The church. Because
The church.
yes, you know the Catholic Book Center, the Catholic Book Secretariat, or whatever, at Adabraka. So when you buy a rosary or a book, a book, a non-for-profit book, apparently it's a non-for-profit, spiritual books, they will charge 20%. Rosary, one rosary, they will charge 20% on it. And it's being made, actually the church supplies it, or individuals within the church supply it to the church.
I know better. We would have to dissect the problem and understand whether is a church making it. Usually churches are set up as not-for-profit making.
Non-for-profit,
Right?
yes.
So if
But
there's
they use, so.
So if there's a profit activity, we would need to understand the full extent of this profit business. And if there's documents showing that they registered this profit making business as part of they are not.
It's a non-for. It's a non-for. You see, you buy, the individuals within the church are encouraged to get it. The books for your spiritual growth. The other things to be used by the church. So, for instance, I went there to buy candles. I went there to buy candles for the church.
Okay.
It is a center where we can, buy things needed for the church. So you buy it for the church. And I was
you bought it for the church, but the one you were buying it from, was it
it's affiliated to the church. It's affiliated, it's a Catholic, it's a SVD, it's a non-for-profit. But you see, the suppliers, I think they don't even put money on it. It's like NGO, non-for-profit. So the proceeds, they use it, I think, in taking care of some of the time the priest and whatever. You understand? It is not for individuals. As far as I'm concerned, it's not an individual's shop. It is attached to the SVDs. There are various sections of the church.
This is the explanation.
I'm talking particularly because I went there to buy, and I was wondering how they could charge 20% flat on everything, including Bibles.
But did you request for their VAT certificate, whether they are registered?
They gave it to me, yes. They said the VAT people come and they insist that it's a whole. I was mad at, actually, I was very mad. That if you are charging, it never used to be. The lady said initially it was just 4% on everything, So I don't know what the 4% was for, but initially she said it was 4%. When they imposed that, they rounded it to 20%. the GRA people come there and insist and they tell her that she must charge 20% flat. So on the receipt she gave me, there was 20%. So I bought something 250, and she started charge me 50 Ghana. And she said when the the GRA people come, they come there, they tell her to charge on everything. And I said, why? You are discouraging, what do you call it, spiritual growth. Why? Candles, I'm buying candles for offertory for church. I have to pay tax, 20% tax on that. So she said I should write to the, what do you call it? To, what do you call it? GRA, yes. But I wanted some education on it first. And who are the people who come there to take the whatever? I had the receipt. I kept it in the book.
Okay, so let me respond to your question. Right. So the first thing is initially it used to be 4% because it used to be 4% because the flat rate, it was still good, so flat rate of 4%.
Okay.
And at 1151, I consolidated everything. So now whether taxable supply or taxable good, it is 20%, right? Now the product that is being sold, religious product, when we went through all the exempt supply, right?
Okay.
We've established that religious products are not exempt. So if they are not exempt, then they are what? Taxable.
Taxable. But
That
why didn't they make it exempt? You are killing. No. Are you? Me, I want to make my case because it's more or less.
So
continue. Tell me.
so with this webinar, right? So this sentiment and concerns, right? We can probably raise and share it with the authority, right? But as a way of get an understanding of this webinar, we want to end it, but we might pick it up as a ongoing conversations, right? So
yes.
So we've established that it is not exempt because now we know all the exempt supplies.
Okay. All right.
The NGOs are not automatically exempted from tax. No.
VAT. VAT.
They are not even VAT.
Okay.
They are
yes,
only
I know they are not
exempted
exempted from tax. Yes.
Yes. So they are only exempted from what we call CIT, that's company income tax.
Okay.
But aside that, if the NGO has employed individuals and they are paying salaries, they are supposed to pay PAYE. If the NGO goes to buy anything from any shop, and they are making payments, they are required to do withholding, right?
Okay.
If the NGO goes to any supermarket to make any purchase, they are required to pay VAT. So the NGO by nature are not exempted from tax. They are exempted from a specific tax, which is the company income tax. If the NGO engages in any activity that has the likeness of a business, they will be required to treat it like a business. So whether they charge a peppercorn fee or not is not really important. Once the activity by nature is a profit-making activity, then they're supposed to pay the applicable VAT. You can have a church that has a hostel or a university. Once they are charging lower fees, it doesn't absolve them of the tax obligation. So that is well established. So I don't know the business, but I'm going to tell you that with this little discussion, they move from 4% to 20% because of 1151, the new act. The product in question is not any of the products that we are talking about in the exempt schedule. So it means that if it's not exempt, it is taxable. Right.
What? One more question. Are you not done? You are not done. Okay, finish up and let me.
And the last one is the fact that they are not making profit by charging lower fees does not absolve them of charging you VAT.
Okay. All right. I get it. But from the moral, I'm just saying that it discourages, the poor patronizing the products. That's all. For moral.
Yes.
You
Yeah, so
know, that's
from that
yes,
angle, that angle can
yes,
even be extended, right? My
yes,
father didn't have money, but they were charging him PAYE. When I saw his pay slip, the someone that he
yeah.
was getting was paying PAYE. That even made
Oh,
me my interest in tax consulting. So you see, from
excellent.
that moral point, even churches don't want to pay. From the days of Jesus, they didn't want to
Yeah.
pay tax. You have to force them to
Mhm.
pay tax. So if you expand this conversation, a lot of people will not want to pay tax. But I think your point is well noted. Any
Okay,
other
what
question?
about people, somebody, drink, if you have a drinkables, like drinking sports or whatever, are you mandated to charge the VAT if you have not registered on a small scale, not a very large scale?
So supply of good, it depends. So supply of good, if that good is not, if your total revenue is not above 750, then you are not required to register for VAT. But that an assessment will have to be done. You have to give them your turnover. That okay, in a year we don't make up to even 200,000 for us to even register for VAT and charge VAT.
Oh, okay, okay,
So
okay,
by
okay,
the product itself is taxable. So it makes
okay.
it easier. Once you understand taxable supply, it makes our
Yeah.
life easier. You get to
Okay,
know
because
that
when we are
once it's not
getting them,
exempt.
we pay VAT. From the bulk,
Okay,
we
so
pay VAT. Uh-huh.
so once it's not exempt, it's taxable. It's as simple as that.
Okay. All right. Okay. Thank you very much.
Yeah, okay. I think your part has been very engaging. Jerome, can we take two more questions, then bring the webinar to a close?
Hello, Bernard. I think Ishmael has a question in the chat. He says, if I own a fish farm and supply to a specific customer, fish in its raw form and fish completely processed, ready for consumption, how do I go about invoicing the client?
Yeah, so fish in the raw form. When you sell fish in the raw form, that sales is an exempt. So if you go ahead and can the fish, it is taxable. So as a business, you'll be required to register for VAT, right? In making out your invoice, if it is raw fish, you issue it without what a VAT invoice. If it is canned fish, you issue it and charge 20% VAT and levies on it. As simple as that.
Okay, thank you, Bernard. We'll take one last question. Okay, Emmanuel.
Let's take two more questions.
Okay.
Mr. Bernard.
Iman,
Yeah, so you said you wanted to share your screen with us with regards to the practice note, which relates to the exempt supply. So we'll be waiting for that, sir.
oh no, not exempt supply, which relates to the regulation on issuing VAT invoice for tax deductibility.
Yes, sir. Yes, sir.
Okay, I'll do that. But
Okay.
my audience, please pardon me, just 5 minutes.
Okay. Thank you.
You're welcome. In the meantime, you can ask various questions. Yes, any more questions? Okay. Let me quickly run you through this. This is a major problem for a lot of businesses. So it's not even a practice note, it is an administrative guideline. So guidelines on the requirement to show Commissioner General's tax invoice as proof of expenses incurred for income tax purposes. See, the truth of the matter, right? The truth of the matter is that tax deductibility is not based on an administrative guidelines by the Commissioner General. No, tax deductibility is based on the law that Parliament has passed, which is the Income Tax Act 2015 Act 896. Section 9 says that when an amount is wholly, exclusively, and necessarily incurred in business expense, that amount is allowable for deduction as a business expense, right? It doesn't place any subsequent obligation on this deduction. So it's as simple as that. Furtherance to that, the Commissioner General, they couldn't even come up with a law. So it's just a guidance, right? So in this guidance, we are looking at the RAE, the Revenue Administrative Act. We are looking at the VAT regulation, regulations LI 2243. We looked at 870. That was the old act when they brought this guidelines. So you see here, I'm coming. They try to build their case with section 27 of the Revenue Administrative Act by saying that subsection 2 of section 27 requires invoice to be kept. And because it required invoice to be kept, that invoice, they are calling that invoice a tax invoice. Okay. Then from there, they join it to section 9, subsection 1 of Income Tax Act 896 to say that a person who is ascertaining the income of that person or of another person from an investment business conducted for a year of assessment or for a part of that year shall deduct from the income an expense to the extent that that expense is wholly, exclusively, and necessarily incurred for that person in the production of the income from the investment or business during that year. So you see, this is the basis for tax deductibility, not VAT invoice. Then here, it says that when a taxable person is making a taxable supply, based on the VAT Act 870, it's the same thing as in the new Act 1151. You are supposed to issue a VAT invoice, right, through a certified invoice system. Either you purchase the GRA's VAT book or you use the EVAT system, which is very convenient. Or if you're dealing a lot of invoice generation activity, you write to them, they will certify your system, then you can charge with your system, charge VAT with your system. So you are required to charge VAT, and it is a requirement by law. So it will be expedient for you to ask for a VAT invoice for a person that you think that it should be a taxable person. It is expedient. But if you ask the person tells you that, oh yeah, I'm a taxable person, but this supply is exempt, so you don't need a VAT invoice. You should be able to understand that it's an exempt supply. So this is it. Treatment of expense incurred from transaction with person not required to register for VAT. It's easy. Where the goods or services procured for which deduction is being sought is VAT exempt and listed under the first schedule of its 70, the same first schedule for 1151. A person is not expected to provide a VAT invoice as an evidence. Rather, any invoice supported by that other relevant document that's satisfactory to the Commissioner General may be considered for the deduction provided in what? Section 9 of 896. Do you understand? So it's as simple as that. So you see that it is not, see, a person is not expected. That's the key word, not expected. But you have a lot of times where, even though you're not expected, with these guidelines say that they're not expected, they are still forced to issue a VAT invoice for which they are not expected to do that. So it's as simple as that. So, Emmanuel, so that's it. So that's your answer.
Okay, sir. Thank you so much. It's simple and straightforward. Thank you.
You're welcome.
Okay, so our last question. Micah, I hope I mentioned your name well.
Yes, please. It's Micah. You've mentioned it well. Good evening once again, and thank you very much for the nice presentation. My question is on nuts. I saw nuts under the exempt supply, so I want to find out if I process nuts, do I also fall under the exempt tax? I want to know.
the possession of nuts is limited to minimum preservation. So if you have, let's say, fresh cashew nut, right, and you should, let's say, dry or do some small frying to preserve it, it qualifies as exempt.
Okay, thank you.
You're welcome. Okay, so Serum, we can wrap up. Janet has a hand raised, but let's wrap up with Janet. Serum.
Okay. Janet, please go ahead.
Hello, good evening, and thank you for the opportunity. I joined a bit late, but I just want to find out. I supply stationery, specifically A4 sheets, and any company or institution that I contacted, they're asking for VAT invoice. So if you could kindly throw some light on that for me. It's A4 sheet or stationery exempt goods, or they are not. Thank you.
All right, thank you. I have my exempt schedule. Let me just refer to my exempt schedule. So when you look at paragraph 8 of the first schedule, the exemptions are for paragraph 8.1. So you have textbooks, right? Newspapers, atlases, charts, maps, and music. These are exempt, right? And when you come to subparagraph 2 of paragraph 8, right? Imported textbook. These imports are all what? They are not exempt. So if you import textbooks, right, you would have to pay taxes on them, right? You have to charge VAT on them. They are not exempt, right? So the exemption in subparagraph 1 does not apply to the following. So the following starts from E to B to M. They are not exempt, but for paragraph 8, subparagraph 1, these are exempt. Paragraph 8, subparagraph 2, these are not what exempt. So if you can see, do you have any of your items falling here? No, right. Then the only time where we have a paper is when the paper, let me show it to you. So yeah, 22, paragraph 22, supply of paper for the production of what exercise books or what textbooks. So you are supplying A4 sheet to be used in offices for printing, right? A supply of paper, but it's not for the production of exercise books and printing. So it becomes what? Taxable. Please understand.
Yeah. Oh, okay. Well noted.
Right. Thanks. So
Thank
even if you
you.
supply A4 and it's for use in printing, office printing, it is taxable. It is not exempt. It's not exempt. So you realize that with a solid understanding of what actually is taxable, it's that the set is limited. So we can know all exempt, and that can be a strong foundation to know what is taxable. Because once it is not exempt, then it is taxable. Okay, thank you.
Thank you so much, Bernard. This has been a very insightful session. We've covered a lot of ground, from VAT registration thresholds and deadlines. We have also covered compliance timelines and how to make use of credit periods. What caught my attention was the exempt supplies, and from the questions we received from our participants, I realized it was also an interesting topic for them. On behalf of Nexus BI, we would like to say a very big thank you for joining today's session, and thank you to Bernard once again. If you'd like to reach out to Nexus BI for any of your compliance needs, our numbers are on the screen, so you can reach out to us. You can also send us an email via info@nexusbi.co. So we are on all social media platforms, and you can search us Nexus BI. And I'm also sharing a link to our WhatsApp channel.
So thank you from my side as a partner for Nexus BI. It has been an insightful discussion. We want to continue this discussion all throughout the remaining quarters of the year, bringing tax education to the doorstep of SMEs at no cost at all. We intend to do data analytics and Excel training as well. So please stay tuned. It will be expedient for you to connect with us, and let's grow on this journey together. Thank you.